Let's go around the bell with Shawn, Cruz, Trader Strategy Manager at TD Ameritrade, and Wald, Senior Analyst at Oppenheimer, along with Yahoo Finance's Jared Blikre at the Wi-Fi Interactive Board. Actually, Jared, I'm going to start with you. You have a look at the world right now. It looks like a lot of world markets are rebounding from yesterday's sell-off.
Yes, over in Asia, we have Tokyo just about flat, but in Korea, the Kospi's up over 2%. And then in Europe, we have both the DAX and the CAC 40 up about 1.33%. And the FTSE in London is up 1.5%. In the U.S., really going gangbusters, up 2%. But we got to keep in mind here that this has been a very volatile market. I mean, we can look at the 5-day price action in the S&P 500. This market has been averaging a daily range of about 5%. So we got to keep that in mind. Don't get too excited about the bounce. Maybe get a little scared about the dips, but we got a long ways to go before we climb back up here, about 3,200. And aside from that, should be an exciting day.
To say the very least, yes. We just don't know what we're in for as the opening bell sounds at the New York Stock Exchange and the NASDAQ. Dow futures were up better than 600 points here just before the opening bell. And it looks like the Dow Jones Industrial Average is going to start the day on the plus side. And here are the headlines making the first trade front page. As you can see, the Dow up better than 600 points here in the very early going. Italy may be taking extreme measures to battle the coronavirus. The government is considering whether it should shut down all schools and universities for the next 2 weeks to stop the virus from spreading. COVID-19 has already killed 79 people in Italy. General Electric is out with guidance that coronavirus will hit its bottom line this quarter, but it says that its 2020 forecast will remain strong with revenue growth in the low single digits. And Joe Biden waking up a big winner. He claimed victory in 9 states during Super Tuesday, but Bernie Sanders is set to win California, which has the most delegates.
Shawn, GE, big news, top of mind this morning. Free cash flow hit potential this year, $500 million. Isn't that terrifying, not only for GE, but also the broader market that's looking to rally off the Fed cut?
Yeah, I think, one, if you're looking at the market and what they're looking for from the Fed cut, I don't think that was ever really about shoring up demand in the economy, really getting the market to rally. They came out and were very specific and said, we're using this to keep financial conditions loose. And if you think about what the impact could be for some of these companies, and that is maybe this slowdown is going to last 3 months, 6 months, a year, we don't know. But at some point, these companies are going to run into financial distress, making payroll, just making their ability to make any payments they owe. And what the Fed wants to do is make sure the conditions are set for them to access liquidity when they need it. And I think that's really what the Fed wants to do. I think the second part of this is going to have to come in the fiscal front. And that's where you're going to either need help from the Treasury or even from Congress, and not just here in the U.S., but I think around the globe.
Ari, what happened overnight? Explain this. I'm calling it a relief rally, at least in the early going here. Is this that investors had a chance to sleep on that emergency rate cut from the Fed and thought more of it this morning? Is it the Super Tuesday results? What's going on here?
I think it's really just consistent with what should continue to be some base building after the climactic low reached on Friday. We put a note out intraday on Friday saying that was really a rare opportunity for long-term investors, just given the extremes in many of our indicators, whether it's the VIX, the RSI, stocks below their moving average. But I do think that near-term traders do have to keep their expectations in check. When you still have a VIX above 30, I think you can expect this jerky, volatile action to continue.
All right, did the Fed put a floor in the market?
Historically, yeah, Fed easing is bullish for stocks. There is a saying, don't fight the Fed. Now, there are examples of them kind of a little bit late and being reactive, which tends to be a warning. But I think just given the market coming into some support, you got a Fed backstop here. I think really the relative cheapness of stocks now versus the bond market and how low rates are should provide a floor as well. I think we are set up to rally. The question is, what does that rally look like? Is it going to be undermined by fewer stocks participating? There was some internal damage on the way down.
You know, Ari, in your note, you sort of laid out the different stages of a market bottom. Could you just briefly walk us through that? And are we there yet?
We think we're in the bottoming process. Typically, it develops in 3 stages. First, you have the high intensity low. I think that was reached on Friday, just with the extreme in the VIX. Then comes the oversold bounce. Now we're seeing the start of that, but that, while we're a couple days into it, that could really last even a couple weeks. Usually you like to see these bases play out in something measured over weeks rather than days. But I do think it does set up what should be a stronger platform for the market to rally higher over the coming months.
Shawn, you want
the final stage being the low intensity low, where you come back down and test it, but you see a lower high in the VIX and lesser selling intensity.
Sure. Shawn, do you agree with that?
I do, and I think if you look back at some past shocks you've had in the market on the downside, usually that volatility plays out over a week or two for the market to like I was saying, just find that bottom again. I think in the initial phases that I see is usually see cautious buying of equities, and when I say cautious, I mean you see trickling back into the more defensive sectors. So if you look at Monday, the outperformance was really in utilities, it was in real estate, it was in staples. I think that's the first step to investors and traders even wanting to come back in and pick up some more equity exposure. But eventually we're going to need to see some of the cyclicals lead us higher, particularly financials, and that's where I think we're going to get a little bit of a challenge here, and that is, one, interest rates are already low. The Fed did 50 basis points worth of cuts yesterday, and there's the expectation for another 25 before the April meeting. So I think it's hard to imagine financials being able to take the reins and lead the market higher in that sort of an environment. So I will be watching yields, and I need to see one VIX pull back meaningfully below 30, closer to 25, and see the 10-year rise up probably closer to 125, 150 basis points before I think you're going to see a meaningful flow or get that sense that there is enough risk appetite for equities to really make a solid move higher.
All right, what do you do with bank stocks in your portfolio right now? I mean, especially in this environment where we can imagine rates will only go lower. We have President Trump calling for negative interest rates. We saw them get killed yesterday. What do you do with bank stocks?
Well, rates are obviously the wild card for the banking industry, and they're a group that broke down by a little bit more on this pullback. That I think it's really difficult to make the case that they're going to see sustainable leadership without a meaningful inflection in interest rates. So I'd actually, within the financial sector, we'd steer you towards some of the stocks that are less influenced by rates, security exchanges, data services, private equity companies as well, that if you look at these mini collapses from an all-time high, typically the market recovers. I think there's enough market cap that's still in an uptrend where that scenario plays out. But historically, those mini collapses did mark the peak in internal breadth, that I wouldn't be surprised to see a much narrower rally looking ahead. And for us, I think the opportunity instead is in more U.S. large cap growth. Technology, healthcare, these stocks have shown resiliency to what has been oscillating interest rates. These are stocks that have held support levels to a much better degree. The NASDAQ 100, really just a healthy check back to its 200-day average. I think that's really the way to play this market recovery.
Jared, I caught you looking at the financials ETF. That is ugly. That is really ugly.
Yeah, this is the lagging sector of the day, so it is in the green, but if you look at the two-day price action, we can see how much it was down yesterday. Over the last 10 days, still down 13%, wasn't able to recover yesterday. That's a big function of the yield curve. I mean, you got the 10-year under 1%. That's just incredible, but we're also talking about healthcare. That is the leading sector of the day. That's up 3.5%. This is largely a Biden play, so this has to do with the Super Tuesday results that we've seen. Still down 6% over the last 5 days, but over the last two, it's up 1%. And if we go to the Dow Jones Industrial Average heat map that we have here, we can see tech is doing pretty okay today. Apple up almost 2%, Microsoft up more than 1%, Visa as well. But JP Morgan, again, a financial that's under pressure. And then United Health, here's that healthcare play that is up 7% over the last 2 days, up 12% today.
All right. You know, Ari just mentioned healthcare a moment ago. If you look at the 30 Dow stocks, all of them are higher right now, being led by United Health, Pfizer, and Walgreens Boots Alliance. Shawn, is this all about Biden taking it back from Sanders last night, and now there is hope for the healthcare industry now that he seems to be the front runner?
I do think that is really what's playing out in healthcare, and that was my big unknown when we talked about defensives, and usually you lump healthcare in that. I think defensive or healthcare could be a little bit more volatile as this political season plays out. and it's going to ebb and flow with who's in the lead, who's doing how well in what race. And I think that'll actually intensify as we get closer to the general election, especially if it's looking like it's a little bit more of a toss-up in terms of who's going to win. I think you could see a lot of that volatility then play out in the healthcare sector, especially if it's a Sanders who actually ends up taking the nomination. If it's Biden, I don't think so much.
Do you have a lot of exposure? Sorry, what's your exposure to healthcare right now?
Our clients actually, what we've been seeing our clients move into over the past week or so, they've actually been going into some of the very unloved sectors, actually like industrials has actually been one place they've been going, and then also picking up some of the other names that maybe they wanted to get, when they were thinking of Microsoft pushing up to 170, if you were sitting on the sideline saying, I wish I got in at 160, 150, they've been using this pullback as an opportunity to move in there. So more of the growth sectors is actually where they've been looking to use this pullback as an opportunity.
Ari, what's the buzz on your trading desk? Does the market really like the prospects of a President Joe Biden?
Well, I guess if you were to attribute today's movement in the market to that, the answer would easily be yes. Listen, I think the candidates, they're going to ebb and flow just in terms of their polling numbers over the coming months. We will see how the market reacts to that. Typically, the market does very well heading into a U.S. election when there is an incumbent up for re-election. Typically, the market does like stability. It will do better when the incumbent gets re-elected, actually, if you would look back at history.
All right, let's leave it there. Real great insight, everyone. Shawn, Cruz, Ari Wald, Jared Blikre. Thanks so much.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.